Good morning, good afternoon, and good evening. This is Dennis Woven with the Active Trend Traders. Welcome to this week's How to Make Money Trading Stocks webinar. We are a day early because tomorrow the markets will be closed, so I hope you enjoy this long Easter weekend, and we'll get jumping right into the presentation. As you're aware, both our Monday presentation that we do, which is basically after market Mondays, and today's webinar are tied together in that we'll be taking a look at what we were seeing on Monday to see how it panned out. But for today, I've got 3 stocks that I'm going to basically throw out there that are doing really nice orderly pullbacks. I want to remind everybody that all the materials we do present are for training purposes only. Traders should always paper trade any new method prior to the risk of their own personal capital. Here's a little bit about who I am. Started trading back in 1989. It seems like a long time ago, huh? I haven't flown on a United flight here recently because I prefer flying Hawaiian. They serve you a good meal and they don't escort you off the airplanes too often. Anyway, the objective of today's webinar is to basically timely, actionable intel at the end of every week and tying that together with what we saw earlier in the week. Remember, you have been given the keys. You know, no matter where you are in your journey becoming a trader, every time you gain a little bit more knowledge and practice that and paper trade that, it is keys that help you open the future for financial stability. Here's where we're sitting as of about 9 o'clock this morning. All the markets are still up for the year with the exception of the Russell, which dropped into negative territory. Active trend trading is up almost 8%. That's our total portfolio, including all 3 strategies that we trade. So we're just continuing to just add a little bit, add a little bit, add a little bit, and we're on target with about 8%. We need to accelerate some of our gains going into the end of the year so that we come closer to hitting that 40% target that we have every year. Let's go and take a quick look at the indexes themselves. There we go. Great. Okay, those who were on the premium training last night, I talked about this price channel that the S&P has been working in. As we see, it's continuing to work in that. What we're seeing right now is a continuation of the sell-off that actually took place and started back here on May 5th. And we continue to proceed it down. We've had a bearish cross over the 8, crossing below the 20, and now if prices close where they are right now, we will have a close below the 50-day moving average, which is the first time in a long time we've closed below the 50. Oftentimes traders utilize the 50 if prices close below that. That can be indicative of a potential change in the complexion of the market. And as we see, we're continuing to push down, and since we are breaking the 50, we'll look for support here down about the 23.20 level up to the 23.23 level. If this level of support is broken, then our next level is down here at the 2300 level, and that's about, oh gosh, how far is that? That's about 35 points, or about $3.50 on the spiders. Weekly chart continues. The TSI turned over. The momentum is continuing to move down. Notice that the momentum since about the end of January has kind of gone, flat lined across, hasn't really dove, and so it's not telling us that there's a huge amount of weakness in the market, but it is basically just kind of tipping over gradually. Same thing on the market forecast. Its longer term momentum on a weekly chart is just tipping down to the downside. If it starts to accelerate with a larger sell-off, then and takes up a steeper rate of descent, then we'll expect it to get down into its lower reversal zone, which is on the market forecast is down around the 20 level, and then we'll start looking for a setup to move into the end of the year. Those of you who are able to read Mike Traeger's article this weekend or on Monday that we posted with the on the stocks on the radar report, he talked about the concept of, is it wise to sell in May and go away? And he gives some comparison of what tends to happen between the May-October timeframe. Oftentimes it is a very dull, not that there's not tradable moments in it, but kind of a dull moments for the indexes. We'll see if we, like I said, pop down below this out of the current channel that it's working in. It continues to be in a short-term downtrend, and we'll see if that continues into the continues into the future, and how far down is it going to go? Where is it going to find that level of support needed to make a move? As we saw last time, it got down into the 2320 range. The day after we get a crossover, the TSI bounced back up, but as it moved back up to the top of the channel, as I've highlighted several times in the past, what happens is oftentimes when you are in a downtrend, the zero line right here on the TSI works as a level of resistance. So it'll push up against it, then it'll roll back over, and that's exactly what happened this time. We'll see if we just kind of continue to chew along below the zero line as the S&P works its way lower. NASDAQ. NASDAQ, definitely holding up better than the other indexes. It has rolled over. Its TSI on a daily basis is also below the zero line, which is indicative that it's going into at least a short-term downtrend. Really hasn't shown up as a full-blown downtrend other than just a pullback right now back into a support level, which is support level is about 50, anywhere from 53.50 down to the lows here at about 53.16. We are getting a stop at the 8-period moving average on the weekly chart. However, the TSI has rolled over and is pointing down, and it's got a pretty good slant moving down. So we keep an eye on that. TSI has tipped over a little bit more with a steeper angle than the S&P. So we'll see if we break out the bottom of this support at the 53.22 area. As we stand right now, the NASDAQ is kind of like in no man's land. It's, one can, if they wanted to trade to the downside, you could take a trade off the moving averages or wait until the 8 crosses the 20 and then trade the QQQs to the downside, or TZA, which is the inverse index ETF on this one. The Russell looking very interesting. As we can see, the Russell is making its way, selling off, moving back down now below the 100-day moving average, back into a support zone that runs from about 1335 up to today's lows, or about today's lows, about the 1346 level. As we can see on the weekly chart, the TSI turned over several weeks ago and has been going down more steadily. Keep an eye on the momentum on a weekly chart. It is just dropping below the zero line. And so we'll see if we get some acceleration going into next week. One of the things I'm looking at going into this weekend is normally I'd be in a hurry to get into some positions for strategy 3 and that kind of stuff. But this week I'm going to kind of take it easy on that, simply because There is a lot of unrest in the world out there, of course, and with this being Easter weekend, there may be some, who knows, there may be some terrorist attacks like there was last week in Egypt and also in Syria. So that could disrupt the market going into next week. And if none of that stuff happens, or if it's very muted, we could potentially look for a little bit of a rally going into next week in the indexes for a couple of reasons. One, getting through the weekend safely, and number two, next week is monthly expiration week, and the monthly expiration week tends to have a bias to the upside, and so that's what we're looking at with that. With the Russell, you can go ahead and lay in. It too has been working in kind of a downward channel, but you can connect the dots here, across here. It almost got back up to the top of this channel, but if I connect these candlesticks there, the lows of these candlesticks, as you see, we have an expanding type of formation. Oftentimes that is indicative of a weakness in the index or weakness in the particular market, and it seems as if the Russell is weaker than the other indexes. So we'll see if we can take out these lows. If we take out those lows, and we're probably going to visit the 1307 or 1296 level, which is the breakout level from when it broke out above these highs here and moved up. But almost for the whole year, since October, reaching October high, the Russell has just kind of moved sideways, a little bit of upside, but again, support 1350 to 1332. That's what we'll be watching. Let's see if I can get up there. There we go. Okay. So we did not take a look at this chart the week before last, but it is the percentage of stocks above the 20-day moving average. As you can see, the S&P or the spiders are the blue lines up here, but as you can see, the Russell, the index is like the Russell or the NYSE, which is a non-leveraged index, again, is pointing down and showing that it is weaker than the other indexes. Now, of course, Mike and I become interested in this particular indicator when prices get down into this area. However, we have not had a close below the 30s since November of last year. And so that was our last great signal with the early warning alerts, and we're waiting for some to take place for this year, which have not taken place as of yet. So stocks and ETFs that we have been watching. Here's the stocks that we reviewed earlier in the week. WB, which we have a long position in, FAS, AMAT, AIS, MOMO, and then we are always keeping our eyes on both Nugget and Dust. As the market has been falling, gold, the gold miners in gold has been going up. And then Tesla. Tesla is kind of a trip into itself. And as you're very well aware, it pushed all the way up to almost 313 this week. It has a new target set by one of the institutions, gave it a target up about $360. My measured target on the potential move is up to about 332. And so let's take, and we'll come back and take a look at those. So the reality of trend trading is basically know the trend, define the area of interest or value where you want to take action, define the trigger strategy and targets that you're going to be utilizing, and remember, we only control when we enter and when we exit. Never chase a signal, never. There will always be another day, another market. If you miss a move, so what? And that was from Peter Brandt, who's an excellent trader. And then I've added the And let's see, let's take a look at those stocks that we were talking about. So we have Momo. Momo did a breakout up here at the 36 level. I'm waiting for some kind of a pullback into that level for a rebound and bounce. And so if you are, if Momo is on your list of stock to watch, that's what I would be looking for. A retest of the breakout and then a push higher. I'm looking in with the market weakness. I'm looking for stocks that are basically being stronger than the rest of the market, WB, and holding up. WB is one of the stocks that is in fact holding up. However, it's got some support here at 50. We've got the TSI started to turn up earlier in the week. We took a position in it on the 11th, and then we're waiting for a pushback. It's got some resistance up here about 51, and then resistance that will also come into play at the downtrending line. This formation is very similar to what we're seeing on on the S&P, but there's several stocks that are showing this formation where you've got a nice little wedge going on. If you break out the top, you're expecting it to move higher. If you break out the bottom, of course, you're expecting it to move lower. And right now WB is just in a holding pattern. AMAT was one we were looking at, but it did a pretty good sell-off on Tuesday, Wednesday, and now today also. It's seeking support and looking for support around the 50-day moving average, maybe setting up for next week. We shall see. AEIS. AS, nothing at this point other than we've got a triangle thing going on here, there, and so we've got a defined level of support that it is testing right at the 50 right now. We've got a bearish cross on the 820, and we've got everything pointing down. So to be looking for a trade in AEIS, we're going to be looking for a tick up. And while we're at it, remember we've got earnings starting next week in earnest, and several of the stocks, just double check and make sure that some of them may be doing a earnings run, but just to make sure that we're not going to be holding over earnings like on EIS aftermarket on May 1st. Nugget continues just to move very nicely. It is extended away from the 8 to 20 and the 50-day moving average. However, we have the 20 just about ready to cross the 50-day moving average, which is very good. As long as this trend line here stays in effect, watch for Nugget to move higher. Now it's making its move a little bit. I don't know if this is a seasonal move, because normally a seasonal move in gold is in the June-July time frame, and so this just may be a preparatory type move. But if it does get up into the $13 level, we entered Nugget I think 2 weeks ago Friday on the 31st, and we entered at the close because we had a tick up on the TSI. We had a green candle closing above the red ball, and we took that as our entry signal, and then we took off part of the position when it got up to a little bit over. Well, something is happening that's good. We'll have to see what that is. Anyway, moving higher, and we'll see how this, works out. Because we got in down here, we're up over 25% on this particular, the remaining portion of this trade. I've moved my stop loss to a trailing stop so that I would at least take 15% profit on the trade, and we'll just watch it as it goes and move that trailing stop as necessary. Right now Nugget is extended, not in a place to go get long on the entity. Then I'm going to cover real quickly 3 stocks that I'm watching for next week. PRA, which we're doing really nice pullbacks into a level of support. PRA, P-R-A-H, Now, targeting this would basically, here's the breakout level about $62, and so I'd like to see it closer to the 62, but we can draw a trend line across the tops here, and if that trend line is taken out, then we expect to move back up to at least around the former high. That's one. IP, HI, another one. Real nice pullback in, basically it came down, made a low bouncing off the 40-day moving average, which equates to approximately 40-week moving average, which equates approximately to the 200-day moving average. I should, I guess, turn my alerts off so they don't blast me while I'm, there we go. So can you still hear me? But anyway, IPH, earnings coming up, maybe a really great candidate for an earnings run type of trade. It has pulled back into a level of support, and we'll see if it can push back up through the 50. Keep an eye on that one. And then last but not least, COM. Again, similar type pattern, pulling back in a flag type pattern. You can just lay in your flag there. It is finding support around a zone where it did a breakout around the $40 level. Notice it has not turned the TSI back up or the momentum. The momentum on a market forecast is still pointing down, and it looks like it wants to roll over here. Let's take a look really quickly at Tesla. Okay, it looks like Tesla's getting a bid, came down and found support today just above this past support at the 294 level, and it's moving back up towards the 305 level. We'll see how that transpires. One of the things I was noticing on Tesla, and I'll blow this up, and this will be the last one I review today, is the on the weekly chart, we've got a really nice aspect of a negative divergence on the, all the momentum indicators, even though Tesla has been pushing up to a new high. So new high with negative divergence often translates to a reversal in the offing. Will it be immediate? No, not necessarily, but it's something to keep our eye on, and we just want to be cautious because Tesla has went on one heck of a run since November of last year. It is up about 63% from right after the election last year. Okay, let's wrap things up. Yeah, Dorothy, the TSI on daily is also going down. So, I'm just, we're just watching it. The big sell-off yesterday on Tesla was due to primarily somebody come out saying that Tesla was doomed, it was going, and the person had a very high profile, wrote for one of the, he was an author, a writer for one of the car magazines and all that type of stuff. So, okay. So with that, here's where we sit. These are the profits we've actually taken in for the year so far. Moving in the correct direction. Strategy 3 continues to do well, as we expect. I've got to get busy with Nugget because it's down a little bit for the year, but the Spider and the Tesla Strategy 3 trades are doing well. So we're up for the whole strategy about 36% for the year. So basically that's it for today, guys. I appreciate you coming by. Again, we're trying to keep these very crisp, very to the point. You have three stocks that are showing promise, but they're going to be connected to what the market is doing going into next week. So keep the egg growing. Have a very blessed Easter, everybody. And it's nice to be back. My wife and I kind of took a little bit of time off last week to decompress a little bit, and we actually spent some time downtown Waikiki. So we'll be ready with the final hour in about a half hour. So please join us for that until Monday. And I'm glad that people are plugging into the Monday webinar. That's for the Aftermarket Mondays, and you'll get an alert, you'll get an invitation on that over the weekend. So until Monday, aloha, trade wisely and profitably. God bless everybody.